Are you confused? How many loans? What kind of loans you should get? What is the best for me?
Oh, good.
I have a right person for you. His name is Roger.mesa. Welcome, Roger.
Hey, thank you.
He's going to talk about homeowners, first-time buyers. He's going to talk about investors. He's going to talk about veterans. You don't have money? You have low credit score? Flip houses. And homeowners repairing the house or doing extension. He has the answer. Of my buyers, they think, oh, I need a house and I'm going to my bank where I put my money and I'm going to ask for a loan. You are not sitting behind a desk in the bank. So what do? Do you have more loans than the bank?
Oh, okay. First of all, good day for everyone. It's a pleasure to be here, Isabel. So I'm a loan officer. I'm a senior loan officer. I do loans for residential and not commercial. And then the difference between what we do with a regular bank is that our expertise is just on mortgages, right? Gamma of programs than a normal bank will do or will have. As per se, first-time home buyers, loans for investors, DSCR, people, IT, people with no migration status defined. The lender for what I work for is called Movement Mortgage, top 5 in the country.
Yes.
We are in the 50 states, and then I'm one of the national ambassadors for the company, representing something called Comunidad, which means community, representing everything that has to do with the whole Hispanic community, and then diversity as well in this area of Northeast.
Awesome. You are a very busy man.
A little bit, busy, trying to help. Oh, yes. Yeah.
So when I send my client to you, it's a very simple question, but it's necessary to know what to expect. So they're calling you, hey, Roger, I need money. And what to expect? What is the list of documents that they need to be ready for you?
Yes, so difference, again, answering your first question between a regular bank and what we do is that we do, I call it B2B, belly to belly, like a person-to-person interview where you can do it online or by the phone mostly in these days. So practically we want to see and hear your story first as a person, as a family. What's your situation? Because everybody's different.
It's true, everybody has a problem and we are here to solve the problems.
Exactly. So practically the clients, they just give me a call and in 10 minutes, around 10 minutes, I will know what they need to do. I always tell them like a doctor, you need to, before somebody pulls your credit, ask you for your income taxes, which is what normally other people do right away. I ask you your name. How are you? And then what's going on? What is it that you want to do? What are your plans? And then based on that, as a doctor, I ask you first, let me see your eyes, put your tongue out. I need to know first
your symptoms. What's
exactly
the problem?
before
Where are you going?
Sending you for an operation, right? So you call me. I ask you some basic questions that, based on my expertise of 23 years on this, I know already what's your situation and what you can do. I don't tell you, oh, you cannot buy a house. I tell you, yes, you can, but you need to do this, and that. You need to prepare. You need to follow these steps, which is what other people mostly they don't do. And my job is educate you, so you can educate others, and then that way we grow as a community.
That is the way to go. You are personal with the person needs to lay it out. Maybe they didn't think of ideas to solve their problem and get what they need.
Yes, most of the cases, people think that they cannot buy a house. There's very little bit of negativism on them because what they hear in the society. Oh, you cannot do that. Oh no, how dare you want to buy a house? You can't. But believe it or not, there's people in this country with less than a year and they already buying a house, and you'll be surprised. All you need is determination, and all you need is to ask, not your neighbor, not your friend, not somebody in the street. You need to ask a professional, right? If you have a headache, you go to the doctor. Everybody else is going to tell you take some aspirin. You go to the doctor and he tells you, what do you really have?
Go to an expert.
So that's right. You need to talk to an expert. Not only if you're doing financing, you need to talk to an expert on financing, but in real estate, you need to talk to an expert as real estate agent.
He gives you the money, I give you the keys.
Exactly, or the money. So practically, don't be negative about your situation, because as worst you think it could be, it may be not, because there's so many programs for everybody, every loan, every rate, every financing program that you have is suit like when you go to the tailor, it makes a jacket for yourself. That's the same way with financing. We need to know your story, and then we accommodate whatever tools you have.
Awesome. And do you work only in the state of New Jersey?
Right. So I am personally licensed in New Jersey, New York, Connecticut, Pennsylvania, and Florida.
Woo!
Yeah, but movement mortgage is nationwide in 50 states. So if I cannot help you with a state that you want to buy in Georgia and Texas, that is no problem, because we have around 200, but in my case, bilingual loan officers nationwide that can help you. Or if you're not bilingual, you don't speak Spanish, well, we have around, I think it's like 4,000 loan officers nationwide that we have in our team.
It's a big company.
Yeah. And answering your question about
The
what
list.
are the requirements, what is the list that the people do. So it depends, as I said in the beginning, your situation, right? Two type of basic loans. Conventional loans, which is traditional, I call it AAA, not like the company, just AAA, because everything is great, like good FICO scores, good income, everything is on paper, you have funds in your bank. Then that's called a conventional loan, and it's fixed for 30 years, and an interest rate is very competitive, whatever is in the market nationwide.
Okay.
And if you don't have that, let's say you're missing something like that, you have let's say good FICO score, but you don't have any funds, you have short-term funds, or you have a lot of funds, but your FICO score is 600, then you will do a back government loan, which is called FHA, from the Federal Housing Administration. It's a very good loan, it's very similar to the conventional. Rate is really good. The only difference is that they charge you something, because you don't, it's called upfront mortgage insurance. It's 1.75 on top of the loan, and they charge you PMI, which is it's an insurance that covers the lender, and it lasts for the life of the loan. In the conventional, you have it as well, but it disappears by itself with time. And so it depends what is it that you need. In the case you need any of these two loans, you're probably going to need W-2s from the last 2 years, your income taxes from the last 2 years, last pay stubs. We run your credit report, because we don't do pre-qualifications. We do full pre-approvals. Like, we look at everything before giving you a letter. I always say to my clients, you either pregnant or not pregnant, but you can't be half pregnant, and that's a pre-qualification. Half pregnant, I go find a house, but maybe something comes out in the way that, oh, I'm sorry, no. We do full pre-approvals. So
that's very important. I'm sorry to interrupt.
Okay.
It's very important for me, because promised that you're gonna get a loan doesn't buy you a house, especially at the time of the offering. We need a pre-approval as an agent, and that's a security that he offers.
Yeah, and these days the market is very competitive. That's what you need, insurance that you're going to close, and then things are well checked. So that's what listing agents want to see when they're accepting an offer as well. And that's what we do. Then let's say you don't have any of these tools. You have good credit, but you didn't file taxes, or you file your taxes short, with very low net income, which is what we take, not the gross income. Then you have other programs where you can do no income verification. Obviously, you're going to need a bigger down payment, and it's a higher rate. Or you can do 12-month bank statements if you're self-employed, where we look at your deposits.
Awesome.
How many deposits you have in a year, and we take a percentage of that as your income. You don't have to provide income taxes. Then you can always do something called DSCR, debt service coverage ratio, which is for investors. Or you're paying rent, you don't want to buy a house yet, but you have proof that you're paying rent for 12 months, but you don't have a house, you can still buy an investment home from a 1 family to 4 families. The down payment is around 15 to 20%, and rates usually are higher, but you can do it with no income verification. So, and the last one, you can also do like an IT loans. If you don't have a migration status defined in this country, but you pay taxes or you have a company and you have credit with the IT, we can still do that as well. And the range in down payment is like 15 to 20% as well. So there's a lot of options. All you have to just ask, and then we accommodate. But those are the steps that you mostly you need to prepare for a loan application.
How about perhaps a viewer that is watching this video overseas and he wants to buy a property? Do you have anything for them?
Yes, so that is called foreign national. So it's for those type of clients that have a visa, type of visa. They don't live in the United States. It can be a tourist visa, it can be a business visa. As soon as you can come in and out of the United States legally, then you're okay. All you need is to open a bank account in the United States, right? And then have the funds needed, which is around 25% of the purchase price. And you need to have the money here in a U.S. bank for at least 30 days. Then, if you don't have credit, which you shouldn't because you don't live here most of the time, then we run the credit from your country. I'm Colombian, so in my country it will be called data credito. So we run data credit. We run data credit in Colombia, and then we see what FICOs do you have from there. And the income verification is based on the documentation from your country of origin. So we look at your income taxes from your country. You have a company, we look at your registration of the company from the country. So you make enough money there, means you can buy a house here. It's only for investment. You can rent it out, you can do Airbnb, whatever it is, and then it's residential, not commercial. But you can buy it as well. That's a foreign national, and we have it.
Awesome, because everybody, he's giving you a list of different people that are watching this program. So second most popular question that people ask me, down payment. Does it cover? Does it not cover?
Right.
Do I need to take it out of my savings? And how much it costs?
So the down payment is money that you give in advance, and the lender, us, we give you the rest. The most common loan, conventional loan, is putting 20% down. That way you can avoid paying that fee that is called premium mortgage insurance, PMI.
That's very important.
PMI.
A lot of people don't know when they're buying a house that they could have an option of putting a little bit more, so they skip this.
Percent in a conventional loan, you skip that PMI payment because you're putting more than 20%. If you put 5%, 15%, 10%, then you have to pay it. It will go away between 11 years or when the house appraises that gap. And then you can probably call the bank and get a BPO, a broker price opinion, and tell them, listen, my house is now worth more, can I get rid of this? But that's another process that you do in the future. But normally people put 20% down, which is a fact that everybody thinks, oh, to buy a house you need 20% down. No. So you only need start from 3% down in a conventional. 3% down, then you go to 5, and the rest, if you want to put 10 or 15 or 20, that's your choice, right? If your income allows you to put 5% or 3%, then you're good to go. That's in a conventional loan. With a FHA loan, the Federal Housing Administration, that is government insured, you can buy a house with 3.5%. As little as 3.5%. Remember, it allows you to have a FICO score up to like 580.
Awesome.
You don't have to have excellent credit. And then we give you the rest. So we give you 9.5%. We lend you the rest, you put 3.5. We also have this is a personal program from the company, from Movement Mortgage. It's called Boost. So based on the necessities of the community, a lot of people is applying for those grants from the government, but sometimes those grants have a lot of stipulations. You cannot buy here, you cannot buy there, you need to make this type of income or not, you have to keep the loan for 5 or 10 years, if not, then we're gonna charge you back the money, or you cannot refinance. So we created this program Boost, that way people have some freedom, financial freedom, and then what we do is we give you it's an FHA loan, we give you the big loan, and that 3.5 that you're supposed to have, we lend it to you in a second loan.
That's very nice.
Plus, we give you 1.5% extra to help you with the closing costs. So, on average, for the house around 400 to 500, let's say in New Jersey, for example, you probably need around $12,000 to $15,000. That's it with everything. We do a big loan and a small loan, and that's called a boost. The second loan is conventional. The first loan is from the government, and then that means that you don't really need that much money, right? Only between $10,000 to $15,000, depending on the price of the house. If you are doing a loan that is not conventional or FHA, then we're talking about putting 10%, 15%, 20%, 25%, depending the program. If it's no income verification, if it's with 12-month bank statements. This is the key. As less you give the bank, more money you need to put down, because it's more risk. You give the bank everything, taxes, back, you give it, then it's less down payment. They can give you more. That's practically, yeah.
Awesome. So now this year, things change a little bit with the FHA, the federal loan, and there's a new law with the 2025. Can you clarify this?
Yes. So with the new administration of Trump, there's a lot of changes coming along with it. And one of those is that for you to have an FHA loan, as a government-backed loan, or insured from the government, you can still, we are in April, we're doing this interview, but so you can still buy a house if you are a resident of the United States, a citizen, and if you have a type of visa or work permit that Fannie Mae, which is who regulates, FHA or Freddie Mac, you can buy a house with this specific type of visa categories, like CA, C9, A12. There's so many. With this new law, if you don't buy a house, or at least get into contract and order an appraisal before May 25th of this year, 2005, when you have an FHA loan and you get into a loan, you get an accepted contract, you order an appraisal, an FHA case number is assigned to the property. So imagine it's like the house having a social security number. It belongs to that house. So when you get into an FHA loan, the house gets a number assigned. If you get that number assigned before May 25th of 2025, you can still buy with work permits or visas, depending the class, right? Not all the classes, but most of them are accepted. Residents and citizens, you can always buy. It's just whoever has a work visa. Like, let's say you're here because you asked for asylum, right? Or you're waiting for your residency because you got married, things like that, but you don't have an official resident card yet. You can only buy a house before that. After that, you can still buy a house, but it will be a conventional loan, which will require you to have a bigger down payment, 5% at least, and then you will be required to have a better FICO score. In this case, 680 up is what is recommended. You can do it with less, but the PMI will be too expensive if it's less than that. So you want to have at least 660 up, let's say, so to buy with a work permit. So you can still do it, but you will lose the benefits of FHA. Sadly, that's what's going on right now.
Oh, okay.
Yeah.
And after May, what to expect with
so
FHA?
after May, FHA will continue just lending, to residents and citizens only.
Okay.
Yeah.
We have a very short time, don't we?
Yeah. You can, if you have a work permit, then you can still do the conventional. Remember, but with 5% down or 3% down. And then you need a better FICO score. So you need to start working in your credit right now. Try to keep the credit cards and everything below 30% of use. Don't pull your credit too much. Don't get too many credit cards.
That's very, very important.
Don't close cards. If you have them, close them. Just leave them there. Just if you already have them, don't close them. If you have collections, try to negotiate to pay the collection in full, and then ask them if they can give you a letter saying that you pay the collection in full, not negotiated in full, and then ask them. They're going to say no, but ask them and ask for a supervisor, and you ask to say, saying you're buying a house and you need them to please give you a letter stating that you have a zero balance, that you're paying them in full, and that they're taking it out of your credit report, because collections, if you paid for them, doesn't mean they're going to take them out. You have to have the company take them out. They don't care. They're like, you pay me, thank you. You're zero, but still going to be there for like 7 years or something like that.
That's horrible.
Right. So if you do these things, you think you have collections and you're maxed out your credit cards, start working on that. So that way in the future you can do a conventional loan.
That is very important. Very, very important. A person does not know. And you finish paying the bill and you're done. But you need to track it and see if it's clear. That's
because
very,
they
very
don't take it out. They don't take it out. It will be there. You need to make anything possible for them to give you something stating that they will take it out of the credit. If you have a credit advisor or a company, you can always contact directly Experian, Equifax, and TransUnion, send them a letter, type it, write it. You can find the addresses in Google. Just put Experian, TransUnion, and Equifax. You send them a letter. Hi, to whom it may concern. My name is Roger.mesa. I paid this collection that I had. Here is the letter. They're saying that they will take it out. It's zero. They will update that for you. They will update that for you, and you don't have to pay for a credit company to do it for you. You can do it yourself.
You have to take care of yourself.
Yeah.
And have the goal to move forward.
Exactly.
And that's solving a problem. That's important.
Yep.
Now, our veterans with the VA, it's called the loan. And my other question connecting to the veterans is, if they overseas serving, can they buy a house in America?
Yes, of course. Actually, Movement Mortgage is being top number 5 in the country. We are top number 5 as well with VA loans. We have a whole department that is expert on this type of loan for these great clients. So there are some requirements that you need. They're not that difficult. A VA loan is, you don't have to give a down payment. Closing costs are very low. You don't pay PMI.
Awesome.
You don't pay PMI. It's very similar to an FHA loan. You have a great interest rate as well. And then it will always be based on how much the person is making, the veteran. So let's say the veteran's overseas, he makes $100,000 a year. Then he can buy a house in New Jersey for $400,000. But he's only making $20,000. Then even if he's a veteran and he wants to buy a house, it's still based on income, how he's going to repay the loan.
Okay.
People forget, oh, I'm a veteran, I want to buy a house, I only make $20,000 a year because I'm in training, whatever. You still need to make the money to pay the debt. So that's clear.
It has to make sense.
It has to make sense how you're going to pay for the house. But yes, practically, we're really good with that. There's some requirements. You have to have like a certificate of eligibility.
Okay.
And then certain requirements in how long you've been in the Army. So minimum is like 180 days in peace.
Okay.
And there's another one for war that is less time. But yes, you can contact us with that, and then we will definitely guide you and give you the best product, because we're really good at it.
And now closing costs, it's an abstraction. A lot of people don't know what those are, and I know there's closing costs for homeowners selling their house, and there's closing costs for buyers wanting to buy a property. So what are those, if you can? I know it's a lot of paper all the time. And if you can just name a few, so people have an idea, what are those things?
Yeah, so seller side, practically, if you have a real estate agent, you pay your commission, right? Commission for the listing. If you are paying the buyer's agent as well, then you pay the buyer's agent, because remember, since last year, I think August, September, now buyers are supposed to or can pay their own, they have to pay their own commission for their own buyers if the seller is not offering. Right?
Offering, exactly. It depends on the homeowner.
So when you look at the house, you say, is he paying the whole full commission, or he's not? Do I have to pay half of the commission to my buyers, agents, or not? All right, so if you're the seller, practically you're not going to have too many closing costs. It's your attorney, and then your realty transfer fee.
Yes.
Which is when you sell. That's practically it, you know. But then buyer side, you need to have your attorney in New Jersey, but some places that you don't have to have an attorney, you can have just a title company. But yeah, let's say in this area, let's say we are in Morris County right now, so you have to.
We in North New Jersey.
Right. So you had an attorney. It's probably average of $1,900 to $2,000 in these days.
Correct.
Then you have a title. Title is, so a company study the house since it was built until the moment they're going to sell it to you. And it's going to show who are the owners, who have been the owners,
if there's any
who
liens,
built the house, if there is any liens, if you have encumbrances, if the easements, if the house has any IRS liens on it, etc., any mortgages, open mortgages. So that's it. So when you close, you're supposed to get clear title, it's called. It means
yes.
Close, they give you the key,
and it's yours.
It's yours, and you should be out of any issues because you had a title company that insure you. They're going to charge you for the search, and they're going to charge you for the insurance in case they miss something and somebody comes, oh, this is my house, so I got a lien on it.
Or I have an inheritance.
Right.
And that was my grandfather's house.
So the title will cover
messy.
you. So the title will cover that part.
Yes.
So this is very important. And then also you're going to have the lender charges. Normally a lender charges for application fee or an underwriting fee. They call it different. Processing fee, the credit report, courier fees. And there's also some fees like recording fees. So you get the house, you sign a deed, but the paper without recording it in the town as per se is nothing. So they need to record it.
It's
that
a
way the
security.
town knows. It's to security that the transaction has been done, and then now the house passed from that person to you. So all those things, people always ask me, what are the closing costs? We lenders never really know exactly what the closing costs are going to be until the end. We can give you an average because based on the market, so how much an attorney might charge you, how much a title could be, how much a recording fees could be. We just give you an average, and it's normally between 3 to 5% of the purchase price.
Awesome.
Sometimes it's cheaper, sometimes it's higher, depending on the taxes, because they're also going to take escrows, which is like, imagine I have a piggy bank, the bank, and then we take 3 months of taxes, 3 months of insurance, and then we put it in the piggy bank. That money is yours. It's not a cost. It's just something we're taking and putting in here so we can pay in advance the taxes and the town. So that we have some savings in there for you. We also, remember, when you buy a house, let's say you buy it in the middle of the month of April, you don't really pay the mortgage next month. You don't pay April, you don't pay May, you pay in June. But it's not really free. Oh, I'm going to give you a month and a half free, 2 months free. There's no, it's never free in this country anyway. And people laugh when I say, there's nothing free, you know that. Why would they're charging something called per diem interest. We're taking that interest in there. And then you live in the house the next month, so, because you pay interest past due, right? So you live in the house, and then you pay for the money you use for those 30 days. So that's why you have that gap. But all those are the famous closing costs, which you're supposed to have as well, besides your down payment. And it can go in a $500,000 home, just multiply. It can be $15,000, or it can be $25,000, 3 to 5%.
Awesome. It explains so much in such a short moment. I love it. So now we have the mortgage insurance. What is that?
So mortgage insurance is called PMI, Premium Mortgage Insurance. It's not an insurance that covers your refrigerator, stove, TV, or your life, or anything like that, or the house itself. It covers the lender. So if you have a conventional loan and you're not putting 20% down, the lender is going to charge you for a PMI, Premium Mortgage Insurance fee. This is based or quoted as an insurance company based on your credit,
okay,
right? And also the type of loan, the type of house, the type of income, your debt against, how much you make, your liabilities. So they look at everything. And then they give you, for some people, buying a $500,000 home can be $125. For other client with the same house can be $250.
Because of the town also.
Because the town is this, yeah. So it's just like an insurance. I'm going to insure you. You are 65 years old, or you are 18 years old.
Okay.
You are married, you have kids, you don't have kids. How's your health? Do you smoke? You don't smoke.
Oh,
With
really?
This, it's just an example of how insurance quote you based on risk.
Oh, on the risk.
Yes.
All right.
So PMI, these companies, there's too many of them. Radium is just one. I'll just give you examples. Yes. They will look at the house, they will look at the value, they will look at everything, and then they'll tell you your PMI for this house is going to be 165. Our job as lenders is to quote with different companies and give you the best option. Normally the cheaper of all of them, because we need you to qualify based in the house that you want with your income, your liabilities, so we can't really give us the luxury to have a $400 PMI.
Yes,
when
it's
you
struggling.
When you can get it 200. So
yes.
we quote it for you, and we try to give you the best, get you the best company, so that way your mortgage payment is not that high. So if you give 5% down, it will be cheaper. If you pay 10% down, it will be cheaper. If you're 15 cheaper, and then 20, you don't have it. If you're buying a house with a government loan insured, which is FHA, you will always have PMI, always, because this type of loan, that's what it requires. The only difference is if you're buying a house with 3.5% down,
okay,
that PMI is 0.55% of the loan amount. It's higher than conventional. And it will last for the life of the loan. Mostly 30 years is what we do, 30-year loan. So you don't refinance yourself, it will always be there. If you give 10% down with an FHA loan, it won't last 30 years, it would last 11.
Awesome.
Yes, and the rate will be cheaper. I think it's 0.50.
Okay.
Yes. So if you're 5% down, it's 0.50. If you do 10% down, it's going to be around the same, but it will last, with 10% down, it will last only 11 years. Can you get rid of the PMI with conventional? Yes. What's the process? The PMI normally stays 1, 2, 3, 4, 5. It can stay all the way to 11 years, depending on the company that gave you the insurance, right? Or if the house reaches the value that was missing to be at 20% down. So you gave 5%,
okay,
but your house in 2-3 years went up in equity 15%. 5 that you gave plus 15 that you already have, that's 20.
okay.
You shouldn't need to pay PMI.
Beautiful.
So what you do, so what you do is, depending the lender, you call the lender, you ask for the process to get rid of the PMI, and then you're going to need something called BPO, Broker Price Opinion. It's practically a real estate agent.
Okay.
Will do a BPO, which is like a small appraisal, a small market analysis.
Yes,
Comparison.
comparison.
Showing. It's like a market analysis that you guys do, but more professional. More than they charge you for a little bit. But that's what the bank would require, plus some documentation. And if they can provide that the house is actually worth 15% or more, you need to be 20% above what your loan is, then they should get rid of it before the 11 years. That's depending on the lender. Not everybody does that. It's depending on the lender. Some lenders say yes, some lenders don't. If you have an FHA loan, you cannot get rid of the PMI. If you did a 3.5, it's 30 years. If you did 10% down, it's 11 years. Unless you refinance, and in the future, you know that the house is also worth 15% more, then you refinance. Refinance means we'll give you the money again with better conditions. It has to have a tangible benefit. It cannot be X for X. It has to be, why am I changing from this beautiful loan to another one? It's a lower payment. I'm getting rid of the PMI.
Okay.
I'm lowering my rate for the point. There's a few things that we look, so that way we just don't give you financing for nothing. It has to be a tangible benefit. And one of those is converting an FHA loan in a conventional loan without PMI. Getting rid of the PMI and lowering the rate. That's what everybody do. And you can also lower if the rates are great, you can do a 20-year loan if you want, a 15-year loan.
So a homeowner that bought the house with a very low rate, let's say 3%.
Right.
And now to get rid of what you said, the PMI, and then their house is worth double. How much do you charge? Because now the rates are totally different. We live in a different season.
So
how's that work?
that's a great question because that's.
Thank you.
I get a lot. I get a lot of questions about this. When people call me and they tell me they have a 2.75 rate, 3%, I honestly tell them, don't ever get rid of that. Don't you dare touching that. If I find out, I'll call you. I know where you live. But don't let anybody touching that interest rate because that's history. That doesn't happen. As you could see, every 100 years.
It's history.
It's because
it's exactly what you say, history.
Yeah, I have also a great interest rate in my house, thank God, and then don't let anybody touch that. If you want to refinance because you need money or something else, you can always do something called HELOC, home equity line of credit, which is a second loan. They don't touch the main loan.
Don't touch the good thing.
Yeah, because even FHA with PMI, anybody giving you today's rate at 6.25%, 6%, it won't make a difference.
Doesn't make sense.
Even with PMI at 3%, you're still lower than anybody giving you a rate today. So don't touch that. Leave it alone.
And
it's a good investment that you have already.
And a homeowner can check with you by calling you to make sure that it's a good way to go, to stay or to move.
Exactly, yes. So that's what we do when we talk. We do an assessment. Everybody's different. So we will know like what type of house do you have, how much you owe, what's the interest rate that you have to see if it makes sense to do something or not. If you're telling me you have 8% rate and you have equity in your house and you have PMI, then all right, let's get rid of the PMI, etc., etc. But when you're talking about very low rates, just keep those. Don't let anybody destroy that because that you're not gonna get. You can look for a HELOCs, which is a home equity line of credit. If you're looking for cash or money to invest, we can do that. We don't touch the main loan. We just do a second loan, and it's based on your income, your credit. So you still need to make enough to cover the house that you have already, plus the new loan, right? You need to still make enough money, so that way together you make enough to keep paying for the one you have plus the new one. And that's a very simple loan. It takes like 10 minutes to apply. It's online. It's artificial intelligence. The artificial intelligence, they look at your house, satellite. They see everything and they tell you, yes, you can have 100,000 or you can have an 80,000. And normally those loans average in rates. It's like a credit card. It should be like in the 20s because credit cards, but it's not. It's like 10, 11. So, and they're fixed rates. So that's a good deal. And you can use the money to buy whatever you want, like buy another property or something like that, consolidate debt. So use your equity, but don't make sense. If you have 7 and the rates on the 5s, that's when you need to make a call. But if you are in the 6 and in the 6, then you won't be doing too much difference.
And you can look at the links that I'm going to leave below. Protect us, correct?
Yeah, www.roger.mesa.com.
Now we're going opposite direction. The person that doesn't have money, but they have a dream. So what can you do for them?
So there are a lot of grants that the government is giving right now, giving away. There's certain requirements for them.
Okay.
So grants like the government, as per example, there's one for 15,000 in New Jersey. There's one for 8,000 in New Jersey. They're all over the country. The lender needs to be participant, which means be subscribed to be able to give them the grants, because we don't give you the grant. It's the government and the agencies that are giving them. We just have to be participants. So we are movement mode. We are. So depending on the type of client, per se, whatever they have. So
the situation.
The situation. These grants. There is one that you need to be first generation, the first person that buys a house in your home, in your family.
Okay.
That's just one, right? There's another one that's the first time home buyer, and they ask you to buy in specific counties.
Okay.
Most of them, and a lot of them are probably going to be underserved communities that need to be populated.
All right.
It's always a catch, remember. When I help you, but you have to give something back. And then you have to keep those grants. There's one that you have to keep it for 5 years. and the other one for 10. You don't have to do monthly payments, but you can't refinance or you can't sell. If you do, then you have to give back a portion of that. When you,
oh, really?
Yeah, that's the sad part of it. And then they are not for everybody. You need to have certain requirements, income requirements, FICO score, I think it's like about 640, just to give you an example, and buy in certain areas where
all
that's
right.
allowed. That's why we created the Boost program.
All right.
So you don't have to apply for that if you don't want to, or if you apply and you didn't qualify, you can still do 100% financing with us, which is the FHA loan.
Okay.
You don't require 600 FICO to do it. And then we give you the second loan for the down payment and part of the closing costs. You still need some money. Let's say you need 10,000 to 15,000. But it's a little hard in this market, but I'm going to say, but it's possible. You can always ask for a seller's concession, which means if you buy a house for 400, you can buy it for 415 and ask the seller to give you back 15 at closing for your closing costs. Okay. So that way you won't need any money. Just answering your question. That would be just one tactic. But it depends the seller, if he accepts or not. In this market, it's very competitive. And most of the time, people and sellers are looking for big down payment, conventional loans, closing fast. So asking for a seller's concession might not be very appealing, but it's out there in the table, maybe. So maybe as the person that is selling to you, and maybe it's your list, I don't know. If the seller agrees, you can still do it. And this is, with FHA loans, you can do up to 6% of the purchase price for seller concession. So it's money that you actually, it's not free. We're lending you the money on top of the purchase price for you to pay for those closing costs. So you're really paying for it. But it is possible. The only requirement is that the house needs to appraise. So you're buying it for 415.
And I can help you with that to do comparables and if it's worth going forward.
Right. So before placing an offer, Isabel, and ask about the seller's concession, they're probably going to be like, oh, it's going to be tough, but maybe there's some markets that is not.
So even with those that seems to be blocking you, I don't have money, I would like to change my life, you need to have courage to ask you or me, I need help. Is there something that I need to get out of, from this position to another position? And what you have in your head to transform it into a living experience, correct? You agree with me, right?
Yes, I do. So if today you wake up and you have life, health, funds, a job, some credit, don't follow or don't fall into something called paralysis by analysis. Thinking too much. Waiting for the rates to come down. I'm waiting for the house to come down. You need to act today.
Yes.
Because you don't know what's going to happen tomorrow.
You don't know about your health. You don't know about your job position.
Yeah, you know what happened with COVID. You never know. Things like that just change things, should change our perspective in life. And we know that we need to act today with what we have because we don't know if we're going to have it tomorrow. So don't fall into that paralysis by analysis. You're thinking too much. I'm listening to 100 people tell me, do what your heart tells you. And if you really think that you're overpaying rent, or you're paying rent and you're making the landlord rich, and he's in Hawaii having the suntan and a piña colada under your name, because you've been there for 20 years, then this is the time that you need to step out and say, I'm going to get pre-approved. It only takes me a few minutes to talk to an agent like me. And then I will know what are my choices. Maybe I have everything that I didn't even know I had it. There's always going to be a good choice to move forward and try to get what you want most in this country, because it's not the same as being a renter, a tenant, than being an owner of your house. You're getting equity. The money is not going down the toilet, let's say, because if you're putting it now in something that is yours, then maybe you can have your relatives living with you. It just changes
the dynamic of your lifestyle.
Exactly.
Especially those that are renting for $3,000 and up. I mean, that's a mortgage. That's the same thing as a rent. And you might say like this, oh, I think I'm not going to stay in this location for 2 years. But do the math. $3,000 for 2 years, it's $78,000. It's like your landlord came and took your car from your garage and your wife's car, and they rob you. You're never gonna come back that money. So even if you say 2 years and I'm not sure about my future, when you sell a house, you're gonna get that amount that you put it in there. Isn't that correct? Do you agree with me?
Yeah. So remember that depending on the market that you are, your house is always gaining value, right? And if you paint, if you change the bathroom, if you build a deck in the back, well, all those things are adding up. Yeah, that's about the economy normally. That's how it works. So you will always gain, and then the possibility in the future to take some money out of that house to buy the second house as an investment.
Yes.
One will give you for the other one. That's how it's supposed to be. But you need to act today and say, have determination and courage, and say, I'm going to do this. I'm going to get it done now. Before things that are happening, you cannot do FHA loans anymore for people with clients with work permits in the future. And there's some of them that they could have bought the house long time ago, but they've been waiting and waiting and waiting. Now their opportunity is probably going away. And things, can they buy? Yes, but things are just getting harder every day. So buy now that you can, because you know what's going to happen tomorrow.
True, and my advice to you, and I think he's going to support this, is work in an efficient way that, yes, you're going to spend all this money in a house, but there's other ways that you buy the house and the house gives you money. You buy the two-family that the tenant that was you, now it's going to revert. You're going to buy that property that is going to give you money. It's going to give you the support income that you need. And in a couple of years, you're going to live for free. How can you imagine having your paycheck coming clean without cutting that 50% or more of that income every month for money that you're never going to see? And then buy the house of your dreams. The second one is the house of your dreams. I mean, you agree, right?
Yeah. And then just remember that there's always opportunities out there. And as I said before, everybody's different. Your situation, you might be thinking you can, but maybe you can more than other people. I've seen a lot of cases. People call me, and you can feel in their voice that they think they can, and then when I tell them, yeah, you're good to go, I'm like, what? What are you talking about? It's because
that's awesome.
You need
That's
to
a
ask.
great feeling, isn't it?
Yeah.
To give them that hope.
Yep.
I want to thank you so much. I really appreciate you, and I mean it from the bottom of my heart.
Oh, thank you.
And you do a great job in helping people and helping agents. And I remember that time. I want to share with you guys how nice this man is. He really cares about people. My client had a friend that was a lender, and he didn't show up with the money. When there was a lawyer involved, I was stressed out. I couldn't sleep. And I called him at the end of the day, and I said, Roger, I'm in this situation, what to do? And he came up in the morning with a loan. I mean, that's like speed. Amazing. And I really, really appreciate it.
Oh, anytime.
And I value so much, and I thank you so much.
Oh, thank you.
Okay, so call Rogers and call me. Make something better for you. Thank you for watching.
Then my phone number is, if you want to reach me directly, that's fine, 973-610-7810, to help you in Spanish and English as well.
Woohoo! And we're going to do a Spanish version of this interview. And my phone number is 201-401-4759. And I'm going to put the links. Okay, follow me, follow us.